Good evening, everyone. I, Nilofer Singh, on behalf of Arch College of Design and Business, Women Mentor Forum under the aegis of Arch College, and on behalf of Wiki Banking Council, welcome you all on today's event. It's a formal closure of Global Mentoring Walk celebrations we have been doing since last week. Global Mentoring Walks have been organized every year since 2011. And the outcome was the establishment of Women Mentor Forum in 2014 by Ms. Archana Surana, a lead fellow and flag bearer of Vital Voices, Global Mentoring Walk in Jaipur, Udaipur, Bhilwara, and Delhi. Women Mentor Forum is a network of women entrepreneurs and professionals who have gotten together to pay it forward. Women Mentor Forum essentially addresses mentoring relationship that develops and advances the process of learning, unlearning, and relearning of new skills, takes up new challenges on the professional and personal front. To set the ball rolling, I would like to welcome our guest, Ms. Anjali Singh, who is Managing Director, Deutsche Bank. She joined Deutsche Bank in March 2020 to head corporate banking operation. She has more than 20 years of work experience, mostly in financial services, different roles in operation, account management, strategy, and business. Prior to Deutsche Bank, she was Global COO for Banking and Capital Market at Genpact, where she spent 14 years in different roles across business operations and corporate strategy team. She has also worked with American Express and FIS in her career. Ms. Anjali has an inherent passion for developing and sponsoring women leaders and gender diversity. She is a part of many women leadership forums and organizations and mentors women both in and outside the companies she has already worked with. She is National President, Wiki Banking and Credit Council. The key focus area for Wiki Banking and Credit Councils are educate via investment advice, facilitate via lending, and empower and enable via funding. So that's the three key focus areas of Wiki Council. Ms. Anjali is a postgraduate from Delhi University and enjoys reading and travel in her free time. Her biggest motto in life is to keep challenging oneself and learning. She shares her thought on a blog, We Live and We Learn. We are delighted to have you here, Ms. Anjali. You're welcome.
Thank you, Nilofer. Thanks.
Moving on, I would now like to acknowledge the presence of Mr. Vinay Mathews, COO of Faircent.com, India's largest peer-to-peer lending platform. Mr. Vinay Mathews is an industry veteran with 25 years of experience in scaling up operations and delivering profitable growth for internet business. Mr. Vinay holds a master's degree in business administration from the Institute of Management Studies, Devi Ahilya Vishwavidyalaya. He has held leadership positions with several renowned organizations like Indian Express, Rediff.com, and Bennett Coleman and Company Limited. Prior to co-founding Faircent, he was serving as National Head and Associate Vice President Sales and Service Delivery. In today's interaction, Mr. Vinay will be enlightening us about how funding can be made easy and also about Faircent.com at length. Faircent.com was founded in 2013. It's India's largest P2P lending website, which caters for retail and business loans. It was showcased as one of the top startups at Startup India. Selected for the first batch of NASSCOM 10,000, it is part of the Microsoft Accelerator Winter Cohort and BizSpark program and was one of the top 10 companies from India to be selected for Web Summit in 2013. Faircent has been awarded the status of a super startup by Super Brands. Faircent.com is India's largest P2P lending website with more than 20 lakhs registered borrowers, 2.5 lakhs registered lenders, and loan disbursement of more than rupees 2,000 crore till date. Times of India has named Faircent.com as the top startup to watch for in 2017. Much more about Faircent.com we'll be learning from Mr. Vinay Mathews himself. It's our pleasure to have you here, Mr. Vinay Mathews. Thank you so much for giving your time.
Thank you so much.
So now I'll welcome our very own Archana Surana. Archana Surana is a well-known name in the Pink City. She successfully carries forward a legacy of 20 years as the founder and director of Arch College in Design and Business. As contribution in the space of youth and women empowerment, she has established strong pathways internationally in design education, as well as mentoring through Women Mentor Forum founded by her. A widely traveled and noted speaker, she sits on various national and international forums as of academic and industry. She has been appointed as Dean Fashion Design Faculty and Academic Council member of Rajasthan ILD Skills University. She is the chairperson for Fashion Colloquio 2020, an international colloquium hosted and organized by Arch College of Design and Business in Jaipur from 26 to 30th January 2020. She is Vital Voices Lead Fellow and a Yuva Icon Awardee at the hands of former Indian President Dr. APJ Abdul Kalam Azad. Abdul Kalam, sorry. So I welcome Archana ji and I hand over the stage to Archana ji for the further proceedings. Archana ji.
Thank you, Nilofer. It's such a pleasure and a delight to have a man amidst us, right? Today, because at the Women Mentors Forum, I think it's the first time we have a male member who's going to be speaking to all the women here.
So I was thinking, am I the lucky one?
Yeah. So my special thanks to Anjali Singh, who's made it possible, and her leadership at Wiki, heading the Banking and Credit Council, has gotten us to put this event in place today. And I'm really touched because, you know, funding has been something that has been something that has put all the women entrepreneurs, or anybody for that matter, any entrepreneur, you know, really stuck, you know, because where to take from, whom to take from, where to go, how much to take, from whom to take, where is the credibility, their credibility, others' credibility. There are a lot of questions around funding. So today we're going to have it all sorted. And I was just talking to Vinay's colleague, and the way she made me understand in just minutes, it felt, wow, I'm going to scale up my business now to the next level. Funding is that easy. So I think, you know, when we actually articulated the topic funding made easy, we were trying to make it easy, you know, but now I can just, you know, when the moment I got to hear what Faircent is doing, it just occurred to me that really it's easy, because if with a platform like his, it can be really possible to have a lot of people, whether you're women or not women, you know, get into a space which is very a trusted space with the kind of environment that will actually allow you to grow. So I think it's Anjali's vision to have brought this all together. And Anjali, because you've been into the corporate sector all this long, so I'm going to ask you a question. This might be intimidating also. So just tell me, you know, why did you choose to become an entrepreneur while you knew so much about, you know, business, about finance and everything?
So first of all, thank you, Archana. I think it's wonderful to be here and to have Faircent with us, because we need Banking Council. Wiki Banking Council wants to do three things. We want to be able to give women investment advice. We want to be able to help women understand the lending space. And the most important for entrepreneurs is funding. So we look to partners like Faircent and others, because we are really just the aggregator. We want to just bring, you know, people like Faircent together with women that you all in Arch College of Design and Business, you know, mentor. So hopefully this is going to be something that doesn't end today. Now, I started my career like, you know, so long back that if I don't like talking about it, it gives away my age. Let me just say it was more than 25 years ago. I started very traditionally in banking. And in those days, India wasn't the startup hub that it has become. India was not the innovation hub that it has become. Banking was one of the most sought after careers. So frankly, I thought I'd ended up in a very good space when I got American Express as my first job. And I spent almost 7.5, 8 years because life was different then and ambition was sort of slower than the pace at which the next generation is going. From one company to the other, I've moved 3, 4 companies, but I've just stayed so much in the corporate space that there's always fascination with being an entrepreneur because I look at the other side. I've even had some ideas and thought, why wouldn't I do that? I've never taken the plunge. And I can tell you one thing, that to become an entrepreneur is the real and correct way to true wealth creation. You can be in corporate life, you can actually lead wonderful, comfortable lives, but I don't think it can give you the kind of wealth creation and the kind of satisfaction that entrepreneurship can give you. I've just never had the courage, Archana. And now also I keep saying, I'm going to hang my corporate boots in the next 5, 6, 7 years, and then I'm going to do something. I suspect it'll be something in this space because it's my passion, but I still talk about it, I still think about it. It just boils down in my case to courage, and women, despite me being a banker, think there's so much to do. So if I listen to Vinay today and understand how easy it is and how, companies like theirs enable it, maybe that plunge will happen soon.
Wow. So you talked about wealth creation, along with wealth, definitely there's a lot of value that comes in. And you're so right, when I started with 2 rooms from my residence, I didn't know I'm going to be here. So I think for every entrepreneur, there is a choice to make how big you want to make it or how limited you want to keep it. And, house, you can still reinvent every time you are in whatever space you are. And there is nothing that's actually binding you. So you can make your right choices at the right point of time in your life as an entrepreneur, which is probably, I think it's a quite a opportunity that brings in a lot of flexibility for a woman, because she has a lot of hats to wear and there's a lot of responsibilities and a lot of multitasking that goes around. So very well put, Anjali. And while you are now heading with Vicky, definitely you've got these 3 pillars that you want to build. The banking and the credit council ecosystem. Yes, sure. With Vinay, I think we can probably by the end of the session, we'll have more clarity in terms of what Vicky will take us through in the next course. But tell me something more if you would like to share regarding how Vicky works and what is the mandate behind it.
Sorry, Wiki is a broader, forum. It's the Women's Indian Chamber of Commerce and Industry. They have many different councils. This is the Banking and Credit Council, and there's councils in marketing, there's councils in fact, microfinance, there's councils in communication, skill development, everything. And so when I was told or requested to become the national president, I thought, since there's so many councils, I'm asking to do banking. I understand banking, right? I've been a almost lifelong financial services person. Therefore, what are the 3 things in banking that would help women? And that's how we chose these pillars. I have not gone into the areas of skill development, women leadership, nothing. I'm keeping it very, very limited to financial empowerment of women because this is the banking pillar. Because there's so many other councils doing that. And to be honest, Archana, there's a lot of that going on, right? The mentor-mentee space is got great forums like yours doing that stuff. So we have actually done none of that. All we want to do, our vision is to become the aggregator. So if women want to understand, how do I invest my money? Well, come to Wiki and we'll kind of help you understand. And not that we directly are the ones who can do it. We have partners, Faircent is one of them, who are going to come forward and partner, they'll build their client base. If a woman wants to understand lending, how do I lend? There's a beautiful white paper coming out in the next week, which will give you the end-to-end lending landscape of what's there in India, what schemes are there for women. And last but not least, and most important, funding. So if women want to start something, again, women like me would be like, oh my God, do I need 50 lakhs? Do I need 3 crores? What do I need? How will I start? Where will I go? And I'm a banker, right? So I'm talking like 15 years ago, I would have probably, struggled with some of these things to start with, because you know what banking does for you. Look at what's happened today. Peer-to-peer lending and all kinds of different schemes are there for women. So, but that's what Wiki Banking wants to do actually. It wants to become the connector. We are not a bank. We can never offer the loan. We can introduce you to people who have all of those. We are not the financial advisory company. We can introduce you to our partners who are going to give you all that financial advice, whom you can partner with. And we can introduce you to, people whom you can lend money, who will help you understand all of that. So that's kind of where Wiki Banking is. Thanks.
So thank you, Anjali. While we understand that we've got our banking system, which has a lot of schemes for women, as the SBI has for the Sati Shakti, you've got the Punjab Bank, Punjab National Bank. They've got also something. We've got the government schemes which are there under the stand-up, the ecosystem as well, and you've got these microfinance companies. So there are a lot of different kind of models which are already existing in the market. So my question is now to Vinay now. What is that he has seen and what occurred to him when he actually conceived this? Where did this idea come? How are they've become the market leaders in peer-to-peer lending? How is it different from the other lending schemes? And what are the merits of getting into this kind of, lending program?
Peer-to-peer lending is a two-sided marketplace, So I've had experience of being in the two-sided marketplace for a very, very long time in the internet space. Just like a job market or a travel booking portal that you see, there is a demand side and there is a supply side. Or be it Uber, be it Amazon, Flipkart, any of these companies, if you look at closely, there are two sides. One is the demand side and the other is the supply side. And both these sides feed into each other to create the marketplace. So we just are a classical two-sided marketplace. The only difference being that on one side we have lenders, a large number of lenders, and on the other side we have large number of borrowers, and they come together and we make this transaction happen. Now, because this is lending, it takes a little bit of curation to be done to make sure that the money which the lenders are putting out reaches the right set of people. Right, it's not be kind of going out to the wrong set of people. So that's the reason we come in between to do the curation part, and that's where all the technology, all the analytics, all of that plays out. But if you ask me, it's not important to kind of have a background like this to kind of start a business. Fundamentally, I believe if you have an idea, if you have something that you believe in, fundamentally, I think you should go for it, and that's very, very important. And I keep telling my friends, don't think with respect to, you're going to make a lot of money. Think in respect to, that you're going to create a value for your end customers, right? So if you can give value, money will follow. And I keep joking about this all the time, that businessmen make money, entrepreneurs create value. Okay. So, and I also believe that age is no bar. Jeff Bezos started his business when he was 45 years of age. You know how big Amazon is today. So there is no age limit to get into any business. So I think you should start small, get the first 100 customers, see how it goes, see that the unit economics, what you are, putting out and what you're selling, and you're making some margin out of it. If you can get that going, 100 customers, I think, then there will be many avenues for you to kind of, raise money. So that shouldn't be a problem. Fundraising is one of the easiest thing if your business model or the way you're conducting the business is correct, the right way you're going. I think funding is not a challenge.
Right. So considering that there are a lot of these not-for-profit, kind of models, also social impact models, I know they are to be business models, definitely. But yes, the takeaway for a business in terms of returns may not be very high. So how do you look at those kind of social impact businesses?
So they are very good, with respect to certain social activities. If you're planning to do, then it makes a lot of sense to kind of get yourself listed there. Recently, we did, in fact, my son raised some, a lakh rupees through Milap. He put out a small music, he's a piano player. So he put out a small a show and he raised money through Milap to be given out to his school staff, the staff which was, typically impacted by COVID, the ones which are not on rolls of the school, the guards, the helpers, the didis and all that. So he raised money to kind of do that. Now, so it limits. There's some challenge with respect to scalability there. But if you want money for your business, if you want money for your personal needs, then Milap is not the place to go. That's where kind of enroll yourself in a company like ours, P2P lending companies, or any bank or NBFC that you should apply to kind of get a loan. So those are commercial transactions. So that's the way it is. So social organizations, or in fact, the way it works is also there are the last mile is again a model by which there are NGOs and there are microfinance companies engaging with these organizations to kind of make it work. It's a fantastic model, I feel, but scalability is still a challenge. Because at the end of the day, people could lend only a certain amount of money as philanthropy or as a good cause. Majority of the money that they invest would want, they want returns out of it.
Right. With women coming more in the forefront in terms of, having startups and wanting to grow their businesses, what are the challenges that you have faced yourself working with women entrepreneurs, or women entrepreneurs on the other side facing problems in terms of, how to make a pitch to you? So how does it work?
So let me just clarify certain, give you a little bit of background how this works, right? So there is this definition called startup.
For 1 minute. Sorry, I'm just going to interrupt for 1 minute. I'm going to request you just give like a the simple and stupid version of what is peer-to-peer lending, because that would be great.
Okay.
Yeah, thanks.
So there is something called shared economy. Okay, so shared economy is it's a phenomenon which started, I think, a couple of decades back. This was started by Yahoo, where they created a group called Yahoo Groups. People used to kind of participate in these groups. They used to kind of have a common wall and used to write to each other. This group could be of your ex-college mates, could be a flatmates, apartment, any group, office colleagues, and people used to kind of interact in that group. So the genesis of shared economy started from there, and then it kind of moved to companies like Facebook and all, who gave a wall for yourself, a dedicated wall for yourself. And then the third generation companies came about within that space. People started sharing, Facebook gave an option to kind of share your pictures, your thoughts, your memories, your point of view, all of that, and you could share it with your friends and family. Then the third generation came when people started to do commerce, right? So if you have a car, you share your car and make money off it. That's Uber. If you have a house, give a part of your house to kind of for somebody to stay. That was Airbnb. So those kind of models came about, right? So within that model, if you have spare money, you put that out to somebody who can, give it to you with respect to interest, for the money that you put out. So it comes from a shared economy background, and within that ecosystem, there are large number of players on both sides, right? So that's how peer-to-peer lending works, right? So they have large number. We have 2.5 lakh lenders coming onto our platform to lend money. And similarly, there are lots of borrowers. On an average, we lend close to 25,000-30,000 borrowers a month. So these borrowers gets lent by these lenders on a regular basis. So that's how this peer-to-peer lending works. Now, why do this happen? Why does this happen? Because you understand, the custodian of the money is with the bank, right? Banks are the custodian of the money. All the money, individual go and deposit the money in the bank. Bank then lends it out, or it gives to a NBFC to lend it out, right? So either they give it to an individual or an organization, or they lend to any lending company, which further goes and lends, right? So that's how this entire lending phenomena works. But the control of the money is the bank. So peer-to-peer lending is a disruptive model. What it does is that it takes the money directly from people and lends it out to people, right? So you cut out the banks, the NBFCs, all the middlemen in between, and that's how the rate becomes cheaper. We don't have any branches. We have just one offices. We operate out of more than 600 locations, just using technology. So that's how this entire thing works.
Right. So while you've shared about the model, which is more AI integrated, as I understand, and there's a lot of machine learning that you've put into place, and it's completely tech based. So when you look at how to find the right match, is it completely AI operated, the finding the right match, or is it how does it work?
So the way it works is that when the borrower gets registered on a platform, the borrower gets curated, and they get curated on the basis of the ability, stability, and intention. Okay, there's a lot of data that we pick up in that process. Ability is, ability and stability, banks and all of us do, NBFCs and all of them do. So basically, how much you're making, how much your expenses are, and can you afford a loan, right? And can you pay back that EMI that you're taking for that particular loan? So that's the ability part. Stability is that, how long you've been conducting that business, or, how long you've been in that job, or, in the area that you're living. How is your background with respect to, where you're coming from. All of that, talks, tells a little bit about stability of the person. And the third part is the intention part. And intention is a very interesting science, and all the science is being built around that. Intention, you get a lot of intention about the borrower, looking at his past behavior, and that comes with the credit bureau information. We also look at social data. We also look at, behavioral data. We also look at, shopping data. We look at, utility bill data. So different kinds of data we look at to kind of assess the borrower. So if he's paying his telephone bills on time, chances are that he'll pay EMIs also on time, right? So those kind of, final data points are picked up. We look at banking in a very detailed way. We are able to understand, what's the kind of banking the person is, doing, what are the expenses, good, bad, ugly, and basis that we are able to kind of decide what kind of person he is, how much amount of money he could be given to, and what is the amount of, rate of interest and the, tenure that has to be decided. So all of that is, done with technology.
Right.
So when a borrower moves into the system, there are a lot of APIs through which, a lot of data is picked up of the borrower. For example, his bureau is pulled, maybe his, EPF data is pulled to understand, for salaried borrowers to understand, is he working in a particular organization and how long? And before that, does he have a lot of frequency with respect to hopping jobs? We also pull data with respect to banking. We also pull data with respect to his location. Location tells a lot with respect to, how exactly, all of this we get to know. For example, if he's, applying from a particular location, and from there he's going another location to get himself verified, and from there he kind of moves to another location. All of that is an alert for us. So there is a lot of it is there. So that's a completely different, it'll take a lot of time to get it. But basically, we try to kind of assess ability, stability, and intention, and that's how we kind of answering your previous question. A typical challenge that I see in borrowers, and I'll give you some experience with respect to the female borrowers as well. Women borrowers who come onto our platform, we have a pretty decent number there as well compared to the market. So one of the things that we have seen is that the ability to pay, okay, or the cash flow respect to business, or the revenues that you're making is not enough for you to sustain a loan, right? So if I look at that, and if I see that the cash flows are good and the revenues are okay, then I can certain that you can pay back. So that's a very, very important criteria. And currently there is another problem, because there is a lot of uncertainty with respect to the environment that we are in. That's one of the biggest challenges, because all lending companies have tightened their policies primarily because of COVID. We don't know how this is playing out and which industry is getting impacted. Some of the industries are going to have a lag effect. So all of that is yet to kind of come out. I think April we will come out with the moratorium data. How many of them are going to pay back? How many are not going to pay back? All of that is going to come out, right?
Right.
Also, government reducing the rate of interest, is a lot of exciting thing. It's always to boost the growth, but the problem with that is it does not go to the last mile, right? Most of this interest benefit accrues to large corporates, large organizations, stable organization, and banks and NBFCs are very, very cautious of very excited borrowers to come and splurge on loans, right? So they don't want to kind of do that. Also, if there is any borrower who has delayed payments in the past, that becomes a challenge, because that gives not give any lending company confidence with respect to giving out loans to them. So if you have any delayed payments or any payments that you missed out, I think you should pay that out before you kind of come and apply for any of these loans, because chances are you'll get rejected.
Right.
And I think to me, the ecosystem, if you look at the landscape of the country, I don't think so. Cost is the problem. Credit cost has never been, it's more of access, which is the problem.
Okay.
So I think internet gives you that access. You can apply as a borrower from any part of the country. We will look through your application, see if it makes sense, we'll process it.
Right. And I just got to know from your colleagues that, you've opened it for women of this forum and otherwise also until
Yes.
31st of March, celebrating all the month,
Yes.
you allowing registrations. What does that mean, that they can register at this point of time? What that special benefit means to them?
Yeah, so I think we encourage women is a in fact a section itself within Faircent. We want kind of a lot of women to come and participate in lending. My data suggests that women are better borrowers than men, right?
Okay.
Far better borrowers than men. Okay. Latest data also that we have realized is that with respect to the late payment which is happening, men were 82%, delayed in payments, whereas women only 18%. Okay, there's a stark difference there, right? So a huge difference. And initially, when we started a business, very interesting, anecdote. When we started a business, we were told the women are better borrowers, and when we started the business, it was rightly so. It was moving out very exactly the way it was told to us. And we consulted a lot of banking friends and NBFC friends to kind of figure this out. But as we scaled our business, we realized that men and women, both of them are equally delinquent, right? But then we were wondering, why is it that this is happening, and we dug data deeper to realize most of the women used to take money for the men.
Aha.
So that you should not do. Okay, so then we got a fix of that. Now the money only goes to women. If let's say, for example, a woman is applying for a loan, and if you put a man's bank account, the money will not go. Otherwise, that guy also will get assessed, right? So chances are that most of the men, put forward their women primarily because their credit is all screwed up, and that's the reason they want to kind of run this with their, spouses and get their loans out. But in our system, that's not possible now. If the woman is qualified and the woman is, applied for a loan and her credentials is good, the money will go to her bank account. It will not go to husband's bank account.
Right. So tell us a few points that you would like while they are still on the, they've taken the borrowing and they've initiated it while they're working with you. What are the points they should keep in mind so that, their social credit remains, intact, or, they can ongoingly take borrowings? I know you've already covered a lot of points to be very sharp in terms of maybe 3 areas that women need to develop in terms of making a robust portfolio for borrowing.
That's right.
And continually borrow.
Yeah. So I think the first and the foremost thing is that you should always watch out for your credit score. Okay. So people who have not should apply and figure out what your credit score is. It's freely available. I think if you ping once, and most of the portals, very large portals like Bank Bazaar, Paisa Bazaar, and give it to free of cost, right? So you don't even kind of have to pay any money. So you get your credit score out and see how your credit score is faring, right? If you've not taken a loan in the past, take a small loan, okay? A very small loan that will build your credit score. Okay? Credit score is very important because a lot of organizations look at that score to kind of, take the journey forward. If you are new to credit, chances are that a lot of banks and NBFCs drop you off. We still take, if you're coming through a particular channel, we still take a lot of NTC customers, but banks and NBFCs would typically drop you off. So important to kind of have a credit score. The other thing which is important is that what is your eligibility? Whatever is the eligibility required, that has to be met. It should not be inadequate. You should make sure that you're building on that eligibility part. The other thing, a lot of people make mistake is that if you are getting rejected from a particular bank or an NBFC, you look for another loan, another bank and NBFC. So multiple inquiries going to the CIBIL or any bureau will be a very big no for any of these banks and NBFCs. So that means they're stressed for getting money. Please don't do that. Make sure the inquiries are less. Lesser inquiries is better. It shows that you are not in a pressing need of money. Anybody who's in a pressing need of money, banks and NBFCs will not give you money. Okay, so that's true for for us as well. Anybody who's inquired more than 10 in a month, the chances are those people will not get loans on our platform. So those people are typically very high in risk and will definitely go delinquent. That's the reason we and data clearly says that. We also suggest people not to get over leveraged. Like, for example, you already have loans running, don't take more loans, don't kind of overload your loan balances. That again, switches off banks and NBFCs to kind of give you loans. Occupation again is the criteria by which a lot of banks and NBFCs have a view. There are certain occupations they're not, very favorable. I'm not going to spell that out, but there are some certain occupations which are, pretty much okay for example, IT. Okay, if you're a salaried IT company, working for an IT company, salaried customer from Bangalore, chances are that the banks will not give you a loan, because I don't know whether it's true right now, but 3, 4, 5 years back it was true, because they thought that if you're an IT guy, you take a loan and go abroad, you not come back from that. So the fear of the customer going out of country was a fear. So that's the reason sometimes the occupation also has a you should have a solid business plan. If you're an entrepreneur, you should have a solid business plan which you're presenting to the bank or NBFCs. You should be convincing the credit person who's going to talk to you that this is how the money is made, and this is the kind of workflow that you have, and this is the kind of business that you've set up. And I think lastly, proper documentation. All the documentation the banks or NBFCs or any peer-to-peer lending companies would be asking for, I think you should have all proper documentation. That's something which is a very important thing, because they will not move forward without the documentation. Either that documentation access have you to give through online, like we do. We pull all the documents through third party from the government sources, or from Aadhaar, PAN, all of this can get pulled out. Or you have to give yourself, right? So one of the two you have to give. So these are some of the things that you have to kind of keep in mind when you're accessing.
Right.
I just wanted to kind of point out one thing. There is a difference between a debt financing and an equity financing. Okay, so whenever we talk about startups, people think that startups don't get debt financing, okay, because the cash flows are not in place. Their model is, the business models are not in place. So kind of all of those things are yet to kind of come about, right? So in a situation like that, equity financing happening. So if somebody believes in your model, they will come and pick up some equity and give you some money, right? But if you're in not in a startup space, right? So let me define startup as well. Okay, startup is by definition is something that you're using technology to better the current process. Okay, that's the definition of a startup, right? If you're doing a business which is a regular business, okay, it's a greenfield business, like starting a clinic. You're a doctor starting a clinic. That's a regular business. You just have to make a nice business plan, go to a good bank, and they'll fund you. Okay, they'll do a debt finance to you, so you don't have to raise equity money for not doing a startup. Okay, so I think that debt raising is very simple. If you're running business for some time, maybe a year, a couple of years, if you're doing it, I think you'll get finance very easily. So I think that's it. So I think that's fundamental difference. Debt and equity, you remember. Money will not come to you, either it'll come to you on debt or it'll come to equity.
Vinay, you've put everything so, in a very easy manner for everybody to understand. And I'm sure that we have a couple of questions that we can take from the audience. So they can write in the chat box and I can take the questions from there. That would make it easier for us. Okay, so Mona is asking, hi Mona, what are the 3 main reasons for rejecting a P2P loan application?
Okay, so I mentioned this. One is that if you're over leveraged, I think that's a clear no-no. If you have your ability to pay is not there. Okay, so for example, if you're already running a lot of loans, and the gap with respect to how much you are going to, in a particular month, how much you're going to spend, and how much of EMI that you have to give, and the or rent or whatever that you have to give, if that money is not matching up with the income that you're getting, you'll get rejected. Okay? So that's number one reason for you to get rejected. So if your money is not enough for you to service a loan, you'll get rejected. That's number one. Number two, if you have a very bad history, right, a bad credit score, you'll get rejected. Those are, I think, the top 2 reasons for the application to not even get into the system. Okay, so and fintech companies are able to kind of pick that up. Okay, so if you don't have a cash flow, you'll not get picked up, and if you have a bad CIBIL score, you'll get rejected. So those are the two. Rest, we are very open as an organization. Banks and NBFCs take, maybe larger NBFCs and banks take 750 as a CIBIL score. We take 600 as a CIBIL score. Okay, so there is a huge scope for a lot of people to come into our system. So ours is not a rejection criteria, ours is a selection criteria. Okay? So that's the way it works. So we want to empower a lot of people, and if you do not have a good credit score also, or for example, if you do not have a credit history also, then we look at the banking to figure out how good you are with respect to your payments and your receivables and all that. So I think those are 2-3 top reasons for which a loan could get rejected.
So Khushbu has a question. Is there anything for lenders as well? Yes. What if I wish to register as a lender? What will be my risks and benefits? How much minimum amount I have to lend?
So the lending, anybody who has a surplus amount of money can come and lend on the platform. It's open. The limit in this set by RBI is 50 lakhs. You cannot lend beyond 50 lakhs on peer-to-peer lending platforms. So that's the limit. You cannot exceed that limit. You have one PAN card would give you that limit. With respect to the risk, broadly there are 2-3 risks. First risk is the credit risk, right? If the borrower does not pay, the chances are that you will lose money, right? So that's the number. So we kind of do a lot of things to take care of that. There are programs which analytics covers with respect to volatility, and give you let's say 12%, and all of the volatility they manage, and just need to give you. We have a program called SIGP which kind of gives you that. But an important thing to understand is that the way it works, right? For example, if I need 1 lakh rupees, and if you're a lender on the platform, you don't give me 1 lakh rupees. You give me some 500 rupees or 100 rupees or 1,000 rupees. So similarly, your 1 lakh rupees will go to 100, 200, 500 borrowers, depending upon how it gets broken up, right? So it fractionalizes your money to an extent where your money is going to a large number of borrowers. That's rule number 1. Rule number 2 is that we distribute this to a large number of cities, right? So it's not focused on one particular city. For example, COVID happened. Mumbai was, in a terrible state, right? Mumbai and Pune was, pretty bad with respect to COVID, right? So if you're originating loans only out of Mumbai and Pune, you would have, had a problem. Some of our colleague companies had the problem of, So we are present across 600 locations. Your kind of loan gets distributed to all locations. Third rule is that we have different kinds of loans. We have a daily loan, we have a weekend loan, we have loans which runs into 3 months to 36 months. We have different industries. We have medical loan, education loan, women loan. We have microfinance loan. A lot of microfinance loans that we do to all women borrowers. So we have 3-4 microfinance companies who we lend to. Very interesting model. We do the tech process entirely for them, and the last mile is done by them. So that's a very interesting thing that they do. So your loans can go out to different segments, different types, and different organizations. So that's how the lending works.
Very interesting. So there's a question, as the education sector is growing at a very fast pace, and how are schools and higher education, how can schools and higher education institutions join hands in fundraising activities?
Is this fundraising for the students?
I think it must be for asset creation or capacity building.
Okay, so we don't do large lending. So if it is for infrastructure and all that, so because we have a limit of 10 lakh rupees, we cannot lend more than 10 lakh rupees to any borrower, right? So because it's peer-to-peer, right? But having said that, if people are looking to kind of take a loan for upskilling themselves, educating themselves, we have a very big portfolio in education, very large portfolio. So we do a lot of education loans, a lot of them. So education is a big part.
So when you say education loan, is the student getting an education loan? Is it the institution getting a loan kind of thing?
So the students get the loan. The loan contracts are signed between the student and the lender, but the money goes to the education institute.
And the student has to pay it only after they finish their qualification.
No, so some of these are experienced, candidates. So they would have, worked for a couple of years. They would have money. They'll start paying immediately. But some of them would be, would not have that kind of money to kind of pay immediately. So we have a ballooned approach there. Okay, so you can pay a small amount, to start with, and you kind of have larger amount coming in after you get a job.
So, like in the international market, I mean, like in the UK and all these other places, you have especially, these education loans where students only start paying after they complete their qualification and get onto the work, become a part of the workforce. So, do you have any kind of facility like this as well?
No. So peer-to-peer lending market has not matured to that level. Lenders would not wait out for 3 years for the education to get over to kind of, for the payback to happen. I think if you ask me, that category of loan is a very non-advertised, pushed category, right? Because it's very, it's government has given some, direction towards that. So it goes to only those students who are getting qualified in some good institutes, right? So they will get a loan, okay, no question asked. Okay, you apply to a bank, they'll get a loan because they know that he'll get a job after finishing this course. But if you are, let's say, studying from a Bhopal School of Social Science, okay, chances are that you'll not get a loan, right? So if you want to kind of get an education going for them, you'll not get a loan. So you have to take a personal loan for that if you have to. Education loan, nobody's going to wait out for 3 years. So what happens is normally the parent take the loan for the kids to get them educated. So that's some of the things that we do.
Right. So India is still not a mature, place for students getting that kind of loan, right?
Yeah.
Right.
They have some large premier institute you get, but otherwise it's very difficult to get a loan. Yeah.
So Suchi has to ask a question. To earn higher returns, diversify your portfolio and invest small amounts across large numbers of borrowers. It is easy to do as it's all tech enabled.
Archana,
She's a part of your team, huh?
Yeah, I was just answering a question on the chat because you guys were busy with Vinay.
Got that.
But I think one question that I can see repeatedly being asked is about the interest rates on Faircent, which Vinay, I think, can take up.
Yeah.
So interest rates on the lending side, you could make anywhere from 10% going up to 16%, depending upon the risk range that you're riding on. On the borrower side, the interest rate starts at maybe 12%, going up to 24%.
Right. So Umang has a question. Do you do equity funding, and what would be the criteria, especially for a non-tech company, standard business or consulting?
So we don't do funding. So we are not equity funders. You have to approach VCs for that, or angel investors to start with maybe. So those are the guys who typically put out equity money. We don't do equity funding. We are not allowed equity funding because we are regulated by RBI. Okay? RBI only does debt finance, right? So all the banks and BFCs, all of them are under debt, right? So they can only do debt finance. We're not supposed to do equity funding. So there is this company called, I'm forgetting the name, Wishberry, I think. Wishberry is a company which does that. I don't know. I've not gone there for many months now, but Wishberry is one company we kind of do this. They do equity, so you can upload your project there or whatever your plan is or model is. If there are some people who are interested in your model and your plan, they will fund you.
Right.
And obviously Kickstarter, which is based out of US, but that's a little crowded. So I think for India, Wishberry is a better alternative.
So this may not be directly associated to you, but very interesting. How can you seek suitable funders for research projects?
We never thought about that.
Yeah, I think India needs research.
Yeah.
This is a big area to look into.
Yeah. So if it's a large amount of funding required, I think banks and the government has to play a role there. But if it is a small amount of funding required, I think we'll be happy to explore.
Yeah, that's a great one. Yeah, thank you so much. That makes, a 10 lakh amount to begin with, and continually then probably build on it would be a good way to go ahead with it. But he's saying funding for schools and colleges in rural Rajasthan, difficult with government formalities. So these are maybe more generic questions because they see you as an expert, so they want a couple of these inputs. So they want your view on this.
What we do is that if you know of somebody who is doing the funding in Rajasthan or in Jaipur or anywhere, in the remotest of area, there are these organizations who typically go out and give money to people and collect money on a regular basis, on a daily basis. There are these models available, which is where the microfinance companies ride on, right? So if there is any microfinance company touching that part, happy to explore, happy to kind of fund them so that it reaches to the last mile. What we have seen is that inadequacy of data, and without data we cannot process anything, right? So it's important to kind of have the data come to us. So if there is a way to kind of get the data, so microfinance companies, they're able to get that data to us, and that's how we're able to kind of push the money out to them. So if you have, some way to kind of get that data out to us, chances are that we'll be able to kind of, fund.
Right. Very interesting. So we can actually close the question hour session with this question that, how to survive without taking funds and be sustainable?
That's, I think, my favorite question. That's my favorite question. I think it's very important to build your business. If you're, building a business, it's very important to build your business without funding, because if you can get the unit economics right, okay, and there are so many businesses available. So if you look out, there are so many of them who are doing this business, right from a pawn shop to a chai shop. Nobody takes funding, right? He conducts that business, religiously, gets up in the morning, comes in, does that, collects and gets back, some money at the end of the day. Okay. Now, if you can run that business like that, the input that you put and the output that you get is more than what the input you put, you're in business, right? Now, if your intelligence and your education and your ability can, you can relook at that and create a better chai shop, which is chayos, right? So I think the way to do it is that if you can start small, see whether you can get 100 customers, get the unit economic right, there is no need to kind of do funding. Then your capital, whatever money that you make, can feed into the business, right? So you don't have to grow. So Amazon is a great example. I don't know, you guys know that Amazon never got funding initially. They were struggling to get the funding. They so much so that he raised money through equity. Through going public. Okay, so he raised an IPO and got some money in, and from there he built out his business. Now the problem is that you start, raising money early on, you'll end up with very small amount of equity with you, right? Because these VCs are very, a different kind of, people, right? So they will always want that pound of flesh. They will take large part of your organization and give you a small amount of money. So they will always be in that mode, and they will then direct you to do your business the way they want. And we've seen a lot of young entrepreneurs, work for the VCs and work for the customers. It's important to work for the customers and work for the VC. So if you work for the customers, you'll make money, and if you add value to the customer, he'll definitely pay you.
Thank you, Vinay, because there's so much of affirmation here. Because when I started in 2 rooms for my residents, for the first 6 years, I didn't take a penny of loan.
That's a very
मुझे एक चीज ही पता थी, पढ़ता खाना. तो मैंने कहा जितना आया उसी को लगाओ. So I don't think I took back anything home, but the amount of fulfillment that I had was immense, because it was growing every time in small little bits, right? But I think the initial couple of months, an entrepreneur needs to keep a lot of perseverance. I remember 6 months, I didn't have a penny. I taught people for just 100 rupees registration. Nobody took admission. But out of that, one who took, brought me 5 who actually really paid for my long run continuity of my business.
A lot of things have changed since then. Today, you have a lot of avenues. It's not just about banks and NBFCs. So there's a lot of initiative from the government. There's a priority sector which the government has opened up for the SMEs, for people to lend to. So if you are coming in that priority sector, chances are that you get a loan from banks or NBFCs. There is a stock exchange made especially for micro SMEs or SMEs who want to raise equity funding. So you should explore that. You don't have to have a typical rule of a main stock exchange to kind of list yourself in a smaller SME stock exchange. So there's already a thing which is available now. There is monetary stimulus which is the government is giving a lot of sectors. You should see some of those sectors so there's a little bit of hard work there. But if you can find the right set of people to kind of talk to, there is a lot of monetary stimulus the government is currently offering. You should try and reach out to that. RBI, in fact, introduced quota to lend to small business to banks and NBFCs. They have said that you have to lend to small borrowers, because most of this money used to kind of go to the large borrowers, and rightly so, because they are working for their shareholders, and it's important to kind of them loans should not go delinquent, so that's the reason they were lending to all large ones, right? So they are now pushing the banks and NBFCs to kind of go to small borrowers. So there would be a small department within the banks and NBFCs simply focusing around that, like the way they did it for microfinance, right? And also there is bill discounting. If you already have a business running, you can pledge your bills, the receivables that say that, money that you can discount that bill and raise money. So there are many avenues today to kind of raise money.
Right. So Vinay, just tell me that, is there a website or, a link one can go to where, you can find all the information of different kind of fundings and the options and the schemes that are available at one point?
Yeah. So if you're looking for a personal loan, then Faircent, you can go to www.faircent.com.
Okay.
But if you're looking for, let's say, for example, if you're looking for pledging your gold and raising money because you're not able to get a, let's say, a personal loan, a company like a Paisa Bazaar, Bank Bazaar would be a better place to go, because they aggregate all the banks and BFCs together, and they have a bouquet of, they have some 100, 200 NBFCs that are tied up with, and they have large number of customers coming to them, and so they flush out borrowers to us. They flush it out to us as well. Okay, so that's another place that you can go to. So these are two options that I can think that you can get the larger type of loan offer.
Right. So thank you so much, Vinay, for putting light on so many perspectives with respect to funding and lending and borrowing. And I think it has truly enriched our audience with the kind of questions that have come in, and also the the Google form. I'm going to definitely share it with you so that you can always address it on a later note. But then we also have a poll that we want to take with our audience right now.
You would like to tell the audience about the special discount they are getting, the Empower 500 code?
Yes, I did ask because this is the entire month. So before we before we take the poll, we also, you can show the screen. We can have these slides being moved so that people can have a look at a couple of things here. So on the Mentimeter, we need to take that, and then we'll let them know about what's available, as a part of the scheme that you have. Okay, since we are marking the, the closure for the Global Mentoring Walk, which is an international event. So ever since last decade, more than, 60 countries across the globe, around 150 plus cities would experience the Vital Voices Global Mentoring Walk globally. And women from different walks of life would come together. And my mentor, Geraldine LeBon, she's a media icon in the United States, and she was the founder of Oxygen Media, along with Oprah Winfrey. So she was the lady who started the mentoring walk. And when women used to ask for a time, she used to say, come for a morning walk. And that's how the concept became globally, and Vital Voices took it all across the globe. So this is the 11th mentoring walk that I'm doing here in Jaipur. And now we are walking into the lives of people, right? Rather than walking on the at the polo ground, which we do every year. And we've done 3. I've done 3 in Delhi with FICCI and LSR Alumni Board. And Anjali has, been a part of those walks in Delhi. And I'm so happy that this connect has moved on to create something so meaningful today. So that's what mentoring and networking can bring to all of us. And so we have the CEO of Vital Voices, Elise. So we have a short 1 minute, 1.5 minute video of hers, which she has sent out globally, because this time we've done a virtual global mentoring walk. So we'd like to hear her. And then I'm just going to do a fast recap and a thank you note, and we can progress then.
Hello, everyone. I'm Elise Nelson, President and CEO of Vital Voices Global Partnership. Happy International Women's Month, and thank you all for joining us at our global mentoring walks that are annual. In fact, For the last 14 years, women leaders have been gathering tens of thousands to mentor and connect each other all across the globe. This past year has certainly been unprecedented for us all. We've watched in real time the life and death results of leadership and action. We've seen the disproportionate impact that this global pandemic and economic downturn has had on women. But what inspires me so much is that at the same time, we've seen women rise up and lead us forward as the majority of frontline healthcare workers, movement builders, and even heads of state. At Vital Voices, we know that women lead differently. And what is incredible is to see that the world is finally waking up to that reality, the reality that women are precisely what our world needs. Never before have I been more convinced that our work, this movement of Vital Voices, it's not just important, it is actually urgent in solving some of these great challenges, from climate change to racial justice, to economic inequities, to combating violence against women. You know, although in past years we may have gathered together to walk and talk, these walks have never been about walking. They've been about connecting, about sharing. So thank you for joining us today to truly be a phenomenal example of women's leadership, of women using our one day of the year, International Women's Day, and throughout Women's Month, to empower others, to celebrate others, to support others on their path. Thank you for using your power, your position, and your voice to empower others. Have a great day.
So I'd like to hear from Vinay once again, you know, what is the offer now? So now the offer will be really lucrative. So the ones who are left are the ones who are really going to get the offer.
So the offer is that we have a registration fee for borrowers who come onto our platform, and there is a lot of cost assessing a borrower, okay, because we pull a lot of data from various sources. All this costs us money. So that processing fee will be waived off, you know, for this entire month for women borrowers.
Wow. And I just got to know that this is your earning. And this is what you make, because when there's a relationship between a borrower and a lender, you don't take any percentage of it. And this is actually your fee. And this is a great contribution that you're making, that you are waiving off this entire fee of yours. So thank you, Vinay. That's we're so proud to have you on board, to have a lot of you know, women fulfill their dreams through this kind of you know, a 10 lakh is the kind of amount that you are ready to offer for women, whereas those microfinance companies would only offer 1.5 or so. So I think, thank you so much. That really makes a lot of sense for all of us. Yeah. And I think we've already touched upon a lot of points. So the recap would be simply that, you know, we are here to create more and more value for each one of us, right? While we are creating wealth, what is important is that as an entrepreneur, we create value. And when we are on a journey of creating value, when we are, you know, when we are passionate about something, money follows, you know, wealth follows. And I think each one of us needs to be passionate about what we want to do and have the courage to do it, right? I mean, failures are going to be a part of our life. I have failed numerous times, but you know, the more I fail, I feel more the confidence to now take up the next step. And yes, funding and borrowing is just not the only way to make your business move. There is lots that is required to have your business grow. So your vision is very important. So invest in your vision, invest in your plan, invest in your ideas. And it's very important, because that is only what will attract even the funders. That will attract Vinay. That will attract everybody to give us more and more money. So get going. And that's what I have to say. All the women who are wanting to make a difference to this planet, and specifically, you know, when we look at forums like Wiki or Women Mentors Forum, what really got us to create these forums? When you talk about Harbeen Arora doing something like this, or, you know, doesn't Anjali have enough work on her plate? Why is she doing it, you know? And why am I doing it when design education itself is so challenging and very dynamic? You know, it's all about making a difference, because you feel that when you grow, When people grow with you, your community grows, and that's where, you know, the whole ecosystem becomes more. Value will come wealth, and that's what is the message for today. And I want to thank you know, all of you for being present. And we got a lot of viewers on Facebook because it's going on all our different platforms. So we're going to have more and more viewers. I'm sure you're going to get a lot of queries, Vinay. And that's for a promise, you know, because this is going to be constantly now being shared on different forums. So that's how the impact would multiply. And my very special thanks to Anjali for making it possible, and the entire team at Wiki, and you know, and my entire team here at Arch and Women Mentors Forum, especially Archana Jain and Nilofer, who've been there, and especially Faircent for having made it possible. Yes, you really privileged Vinay for having moved into our circuit. So that, you know, we talking about gender equality, right? So that is what we are trying to bring in now. And so my a special vote of thanks from Archana Jain, who is a very famous nutritionist and dietitian in the city. So she's chairing the forum this year, and she'll say the vote of thanks. Yeah.
Thank you, Archana. Thank you so much. Good evening, everyone. My immense gratitude to all the participants and guests who took out time to be present for this conversation. Women Mentors Forum has been a tremendous force, emblem of resilience, courage, and determination, that ray of hope in this time of crisis. Today, WMF, along with Wiki Banking Council and Faircent, has brought this session to help women entrepreneurs understand various funding options that can help them grow their business. Our sincere thanks to Anjali Singh and Vinay Mathews for making us understand the challenges, pros and cons of funding, reasons for loans, advantages of peer-to-peer funding. They have made it so easy for all of us to understand as a common man and women. I'm sure we'll use this knowledge to grow our businesses. Our special thanks to our own chairperson, Archana Surana, for making it all possible and keeping this conversation alive and relevant at all the time. This level of session is not possible without a team of dedicated brains working behind the scene. The team of Wiki and Faircent, Mona, Mamta, Rohini, Shuchi and others, then team of WMF and team of Arch College, Manjeet, Megha, Manish and others. A big round of applause for all of them. Thank you all. Thank you all. See you sometime soon. Thank you.